What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome to What's Making Headlines, your weekly wrap-up of all the big things happening in the mortgage and finance broking space. My name is Ben Squires and I'm the commercial content writer at The Advisor, filling in for our editor Annie Kane this week as the host of the show, who's taking a well-deserved break. Thankfully, I'm not flying solo this week though, because that'd be a very sad podcast indeed. I've got The Advisor's senior journalist, Will Paige, joining me. How are you doing, Will?
Yeah, good, thanks. Yeah, busy week of news.
Yeah.
How's yours been?
Yeah, very busy. I think. Yeah, it's been a few big stories, I think. And, yeah. But you were recently away in New Zealand.
New Zealand, yeah, South Island. We've just got a camper for the last couple of weeks, so loved
nice.
it. Really cool.
Highlight of the trip?
Oh, good question. Probably Queenstown.
Queenstown.
Loads of cool kind of skiing, and it's just an awesome spot. Yeah.
Yeah, it's always good to get away, I think, as well. But there's been plenty of news to keep us busy this week. One of the big stories that came out, I think, was it Tuesday or Wednesday? Maybe Tuesday?
Yes, I think Tuesday, yeah.
Yeah, was the latest broker market share figures from the Mortgage and Finance Association of Australia. So broker market share has once again risen to a record high. It's now at 77.6% of all new home loans written. And this is for the 3 months to June 2025. So this sort of represents a 0.8 percentage point increase in mortgage broker market share from the March 2025 quarter, which I think was a record as well.
Yeah.
And it's a 3.9% year-on-year jump, a 10.4% jump compared to June 2023, which was 67.2%, which seems like a lot back then. But
it's gone up quite quickly when you look at it.
Yeah, it's quite interesting. It just seems to keep going up every time.
That's what's interesting is where the ceiling could get to. Because I always assumed 80 would be, but then you look at the UK and that's more than 90, I think, now.
Yeah.
I think I assumed that it would kind of level off, but actually it could keep going up towards 90, I guess. In theory.
I mean, it'll be interesting to see where it ultimately lands. And I think a lot of the banks have been keen to sort of do more proprietary lending or figure out ways they can sort of bring more of it in-house. But brokers just seem to be writing more and more loans, at least mortgage brokers. We got some comments from MFAA CEO Anya Panic, who said, this result continues to reflect Australians' clear choice to work with their mortgage broker as they navigate their home financing journey. It is interesting. And I guess it's just sort of shows people are resonating with the mortgage broker proposition and seeing a lot of value in it as well.
Yeah, and I think it's a trend that we keep seeing. You talk about records and it feels like every quarter is a new record, but it's quite clearly that it's going up.
Yeah.
And then, it'll be interesting to see if it can be sustained. It seems like it will. Based on the size of the jump, it's a pretty consistent increase.
Yeah, and I wonder what the reaction would be also if the worm starts to turn.
Yeah,
starts to go down.
Considered that, yeah.
But, I guess it's going in the right direction at the moment, so no complaints there. But we had another big story, I think it was on the same day, and it's based on a speech from the Australian Securities and Investments Commission.
Yeah.
And you wrote this one up, Will. What did they say?
Yeah, so this was a speech given by Asset Commissioner Alan Kirkland on Tuesday. And he kind of said something that they've hinted at before, but he said explicitly. So he warned that mortgage broking is among its key areas of focus, was the phrase he used, and that the regulator is actively reviewing brokers' compliance. So there was a few kind of areas. He specifically flagged home lending as the largest area of consumer credit. Obviously, mortgage brokers, their role continues to grow. And he said they'll be taking a close interest in the conduct of brokers and aggregators. And he actually said that ASIC had already been engaging for some months with several large mortgage aggregators in relation to brokers' compliance. He didn't name any names. And he said, we will review brokers' compliance with their internal dispute resolution obligations and seek to understand how brokers identify and respond to complaints that flag potential concerns. And he specifically mentioned their best interest duties.
Yeah.
And he did say, actually, which I thought was good, that they get few complaints about mortgage brokers.
Yep.
So since July 2019, only 11 criminal convictions for mortgage brokers, which in the grand scheme of how many brokers there are in Australia, that's tiny.
Yeah.
So he didn't say it was ramp with, brokers not complying.
Yeah.
But it's clear that they're going to take a closer look at mortgage broking.
Yeah, it was interesting. I think, like, as we sort of said, it's something they've alluded to in the past, and them just trying to unpack, how does best interest duties sort of work within the aggregation models as well.
Yeah. And I know we spoke yesterday about best interest duties, specifically for mortgage brokers, and how it's slightly subjective almost. Like, it must be hard for them to regulate what is and isn't best interest duty.
Yeah.
And I guess it's a hard area to regulate anyway. And particularly what I did find slightly odd is if they're not inundated with complaints, why they're focusing on mortgage brokers.
Yeah, well, maybe it's got something to do with just how much business is going through the broking channel at the moment, and they're sort of seeing, they just want to make sure everything's
I think it's probably to do with volumes.
board.
Yeah. And private credit, which they've spoken about quite a lot. I guess mortgage broking kind of ties in with that, and they're probably just seeing how much the size of volumes and how they're going up and thinking we need to take a closer look.
Yeah, so do brokers have anything to worry about?
To be honest, like based on the figures, you say no.
Yeah.
Because not much. There's actually very little raised when we see what ASIC kind of the convictions it gets or the fines it issues. Mortgage brokers are actually rarely mentioned. Like we see stuff every day, and it's far more to do with financial advisors, a lot of that, or stuff to do with private credit. But mortgage broking rarely comes up, really.
Yeah.
What was it? 11 criminal convictions in more than 6 years. That's tiny. So I don't think the industry's rife with bad behaviour.
I think the tone of his speech, it wasn't just kind of like pointing the finger. It was just kind of saying we're taking a look at this.
Exactly.
Yeah.
And he said other stuff, he said they're focusing on other areas. Mortgage broking was just one of them.
Yep.
But he said it was a key priority.
Yeah.
I think mortgage brokers don't have too much to worry about, but it's worth noting that they were taking a closer look at.
Yeah, and definitely something to keep an eye on in the coming months and years, I suppose.
Definitely, yeah.
Perfect. We're going to take a quick break right now, but when we get back, we'll be talking about ANZ's new strategy, plus an update on Westpac New Zealand's trail commissions. We'll be right back. Welcome back to the show. Now, this week we had an update from major bank ANZ regarding its new strategy. Take us through what the bank said, Will.
Yeah, so this is ANZ's strategy day, which was Monday. Obviously, loads of change at ANZ over the last couple of months. They announced that they were going to lay off around 3,500 staff. CEO Nuno Matos has come in with big plans for change. And they basically, Monday, they just went into way more detail about their plans. So plans to essentially cut the majors' cost base and also to expand mortgage and business lending. So they're going to invest more and train their mortgage sales force in-house. So they want to add 50% more mortgage lenders inside branches. Obviously leaning more into proprietary lending and the assumptions away from mortgage brokers. Also more commercial and private bankers. They want to grow the number of staff by 50% also. They've got a new academy for that to kind of train up talent. And they claimed that changes will deliver $800 million of gross cost savings in 2026. Which is a massive figure. And there was loads in there actually. A lot to do with Suncorp Bank. They went into more detail around that. They want to integrate that, migrate over all customers by June 2027. And then they also spoke about specifically the divestment of non-core assets. No details given, but we can kind of assume it's, they're open to making sales and just general more simplification and a bit of detail around tech as well, more kind of, I guess, a centralized tech system, everyone on the same platform. So loads to unpack there.
It's kind of good to see, I suppose. Like, there's been lots of speculation about it, I think, in the past few months. And with the new CEO, I suppose that's a huge part of his appointment to sort of.
Yeah, I think because he's obviously got a background in. I mean, he's been at loads of major banks in Europe and loads of experience, and they obviously have brought him in for big kind of I don't know if restructure is the right word, but big organizational changes and a strategy shift. And he's just come out because he's not been there that long. It's been some massive changes. Yeah.
Yeah. This is why I could never be the CEO of something. I just feel like, just keep it.
Yeah. Well, because you think they're leaning more into mortgage broking in-house, more into commercial and private banking. Commercial lending, private banking. And they need to try and save $800 million. That's in 1 year. Yeah. That is a massive shift. Yeah.
Yeah. Well, that's why you get the big salary in the top job, I guess. Yeah. But yeah, it was good to get, I just, like I said, it's good to sort of see. Yeah. Get a bit of a view of what the next few years might look like.
Definitely. And I mean, we've written about the Suncorp Bank thing previously, but that's nice to get a bit more detail around that with a date. And it sounds like they will just be eventually folding Suncorp into NZ. And I mean, the proprietary lending is very interesting we've seen with Combank just leaning into that for, higher margin as opposed to using mortgage brokers. That's, I think, an interesting trend that we've been spotting for a while.
Yeah. I mean, it'd be so interesting. It would be a really tough job, but it'd be so hard to drive change in such a big organization, I think, because you lose a sense of the scale of particularly like the majors. They're just massive, like 4 of the biggest companies in Australia, and it's just
and I guess even like the cultural shift away from using mortgage brokers to proprietary lending, because there's obviously going to be a time lag with that. You're talking about training people, which can take a long time, lots of money, and then you've got to do recruitment. And I think really interesting to see detail, but there will naturally be a time lag. Say if we're talking about like broker flows and proprietary lending, there will be a time lag before we start to see it more. Yeah. Or like a big shift, I think.
Yeah, definitely. And we'll be reporting on all the changes as they happen. So make sure you keep reading The Advisor in your inbox every morning. Another thing we wanted to cover on the show today, last week we talked about the story from Westpac New Zealand, which sort of we found out that they're changing their commission structure, their trail commission structure. So we received some comments from Westpac New Zealand this week confirming they will be moving to a single upfront commission structure from the 1st of June 2026. This will automatically apply to all new home loan settlements from as I just said, from 1st of June 2026. So mortgage advisors are set to receive 0.9% of the value of new loans, replacing the current combination, which is a 0.6% upfront payment and trail commissions of 0.2% per annum. The major will also introduce a 0.3% top-up payment for new loans settled between 15th of October 2025 and 31st of May 2026, which will effectively add up to a 0.9%. Increase the total upfront commission to 0.9% during this period. So, as we sort of mentioned last week, the sort of New Zealand mortgage market is a little bit different to the Australian mortgage market in the way they deal with commissions and trail and that kind of thing. But I thought it was probably just good to give our listeners an update on this one.
Yeah, I mean, good that, to get details around specifically the structure. I know like culturally New Zealand is in with trail commissions, it's far less common there.
Yeah.
So it's not, if they did it in Australia, it would be, massive. Whereas I think New Zealand is a bit different.
Yeah.
And they've actually previously, I think they scrapped them and then reinstated them again.
Yeah.
So it's not completely new. And we should say also Westpac New Zealand is a completely different entity. Nothing's changing in Australia.
Yes, exactly.
But interesting to get more details on it for sure.
Yeah, 100%. Well, you were on the ground in New Zealand. So you could have gone up
Everyone
in
was
person.
talking about it.
Yeah, absolutely. We're going to take one last quick break now, but when we get back, we'll be talking about investor lending figures and new data on Australia's most prolific brokers for 2025. We'll be right back after this message. Welcome back to the show. Now, this week we've got some new investor lending data from two of Australia's sort of leading property research bodies. What did the data show us, Will?
So new data, and essentially it's shown property investment has increased over the past year. That's a trend we've been seeing, and it's now, isn't specifically investors, they're making up their highest share of new lending since around 2017.
Yep.
It's a really high level. And yeah, as I said, that's a trend we've been seeing. So 1 in 7 Australians now own a rental property, which is really high. I was actually quite surprised at that. Sorry, that was from PropTrack, and then separate research from Catality has basically shown a similar trend. The share of both total loan volumes and loan values relative to historic levels has increased for investors. So in volumes, actually, it's more than a third. It's 38%, which is a big chunk. Yeah. And again, that's increasing and comfortably above historic levels. So yeah, interesting. I know we've been seeing that for a while, but interesting. It seems to keep going up.
Yeah. Do you think with this sort of expanded first-home buyer scheme, how is it going to change investor flows? Do we think it's going to change investor flows?
That's a really good question. I guess the two reasons why we've seen that this year is in property investment going up, rate cuts.
Yeah.
Which tend to influence property investors more and quicker than just owner-occupiers. Yeah. And then just a tight rental market, which isn't going to change anytime soon.
Yeah.
And then if we assume we get one more rate cut late this year or early next year, that's what the market forecast is. Yeah. It's probably going to continue, I imagine. Yeah. That's what you'd expect it to the trend to keep going.
Yeah, I guess investor just has that little bit of a leg up on the first home buyer, I suppose.
Yeah, it's so interesting with the first home buyer because there'll be, I imagine, a bit of a time lag before we see the change.
Yeah.
And then as demand goes up, you just say with basic economics that prices will go up and then it will stop being advantageous. Yes. But it's hard to see because what will happen. I think that's the question everyone's wondering.
Yeah.
And there's almost like a first mover advantage to the change. If you get in early, you get the benefit, and if you wait, then because prices have risen, you don't actually see the benefit. If that makes sense.
Yeah, that's like always one of the themes we come back to. In like everything you do, the right time to buy a property is when you can afford it, rather than sort of waiting for the perfect opportunity. My plan is to win the lottery, and I'll be able to enter the property market.
Yeah, it will be interesting to see the change. Also, I think with the changes for first-home buyers, where we'll see the uptick, because it won't be the increase won't benefit everyone equally.
Yeah, exactly.
And obviously the scheme with different kind of caps for different areas, and if it will be cities or regional buyers that benefit, I'm not sure, honestly. I think generally people are waiting to see what the sort of data shows, I guess.
Yeah, and I think everyone's got their eye on the Reserve Bank as well. And what's going to happen, probably the next few decisions will be, they're all scrutinized.
Yeah, of course.
There'll be lots of attention. And we've seen a lot of the majors push their forecasts back, but now we're getting sort of mixed messages based on new data. So
I saw yesterday they changed the market forecast. It was 70% chance of a rate cut in November, which is quite high. I thought it'd be way less than that.
Yeah, the RBA said that? Or
No, that's just market.
That's just market.
But that was in reaction to kind of RBA speeches and all the employment data this week. Who knows? I reckon there'll be one more cut, I think, and I think it'll be a hold in November.
Yeah.
I think. But that's a lot can change.
Oh yeah, a lot can change. Lots of data.
Yeah.
It's a water to go under the bridge before then. But yeah. Don't take that as financial
Oh,
advice. But yes, there's going to be plenty of work, I guess, for mortgage brokers in the next year or so, no matter what the RBA decides to do. Speaking of mortgage brokers, this week we saw the release of the Advisor's Elite Broker Ranking 2025 for residential. It's an annual showcase celebrating the country's top performing professionals in the industry. If you subscribe to the Advisor, you can sort of see the full ranking in the magazine with our story, and it's sponsored by RealFlow, so thank you to the sponsors for getting behind that. But based on the figures, the top 100 brokers wrote $17.2 billion in mortgages for the last financial year, which is actually a third higher than what we saw in the last Elite Broker residential ranking, which is massive. And this is from a total of just over 250,000 mortgages settled and if you sort of extrapolate all that, it means the brokers were writing an average of 255 home loans a year, which obviously some were writing heaps.
Oh, of course, yeah. It's still massive, that number though, if that's on average.
Still massive, yeah.
And you think one third jump is crazy.
Yeah, well, that's the crazy thing. But I guess it's kind of what we've seen higher volumes from lenders and that kind of thing, and aggregators have sort of been reporting more activity. So
true, yeah. I guess when you look at it like that, it's more the size. One third is a big old jump in a year. Yeah.
Oh, absolutely. But yeah, shout out to the broker who topped the list this year. It was Hunter Valley broker Katie Thomas from Focus Finance, who wrote she wrote a lot of residential loans of FY25 across 280 loans, and her average loan size was 1.77 million, which is massive. Michael Zia from Mortgage Channel wrote the largest number of loans at just over 1,000 loans, which is quite a lot too. But yeah, if you want to get a full list of the rankings, sort of go for it with a fine-tooth comb, see who came on top. If you entered, see where you came. Head to theadvisor.com.au or grab a copy of our latest magazine, and you'll be able to see who came out on top. Will, thank you so much for joining me to run through some of the big headlines of the week. Do you have any big plans for the weekend?
Oh, pretty chilled. I've got a friend's engagement party tonight.
Ah, nice.
Should be fun.
Yeah.
I just need to chill. Hopefully get to the beach. Yeah. You up to much?
It's my dad's birthday, so shout out to my dad.
Is he listening?
Beg your pardon?
Is he listening?
I hope so. Sending all these links to him and haven't received a reply yet. But no, it should be a good weekend, I think.
Yeah. Looking forward to it.
But yeah, thanks for listening, everyone. If you've enjoyed that, make sure you read all the stories, get all the details. And if there's anything else you're seeing or hearing that you think we should be covering here on The Advisor, you can always reach out to us directly at editor@theadvisor.com.au. And it will eventually come back to us. Otherwise, we hope you have a fantastic weekend, and make sure you catch us next week for another episode of What's Making Headlines on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.